Okay, so now microphone, Logitech, speaker. Okay, I can see you. I started recording already. Okay.
Sweet. Yeah, I'm recording on the OBS as well, just in case we need a backup or something.
Absolutely, yeah. And my Zoom is good for 40 minutes, so I'll probably send you another link if we're not done.
Okay, cool. Yeah, hopefully we could do 40 minutes or an hour. Yeah, I'm not in a rush or anything, so it's fine. I was thinking of posting this the week of the 20th. Does that work for you?
I was gonna post it tomorrow.
Oh, yeah. Okay. Yeah. I guess you could post it. You could post it whenever. I'm on vacation for a few weeks and I won't have any content. So I'm like, hey, let me try to just get this out so I don't have any lull or
Yeah,
downtime. But
that's
yeah.
that's the right way to do it. Yeah, absolutely. I just stopped caring a long time ago.
Oh, no, I get it.
But what's your background? I like your. Is that a concrete wall?
Yeah, it's a concrete wall. Hold on. Let me try to show up for you. So I have a loft where it goes all the way upstairs.
Okay.
So I can jump down from upstairs into my main floor.
And is your
But yeah, it's like a big concrete wall.
Is your floor concrete as well?
No, I'm not that bad. I have hardwood, thankfully.
Okay, good.
Yeah. I thought this loft thing was cool, but then it's I feel like I grew out of this a long time ago. I might seal it. I can add more floor, but I don't know. I don't want to spend the money. I don't need the space, so why not?
Okay. I'm not gonna do much edits, okay? So if there's anything um, you don't want to talk about, just say, I'd rather not talk about that.
Yeah, I don't think I would do many edits either. So I don't care too much. So I'm all good.
Okay, that's good. So where do you want to start?
All right, maybe I'll start with an intro. I don't know. I've never done this, so I'll start with an intro.
I don't like intros either, but yeah, go ahead.
Yeah, all right. So I'll do 3, 2, 1. Hi, everyone, and welcome to my first interview with another YouTube blogger. Welcome, Shihab's blog. Shihab from Shihab's blog. Have you changed the name of your YouTube channel recently?
Yeah, I changed it to Shihab Personal Finance.
Okay, that's great. Because I guess if you did just Shihab's blog, people wouldn't know what your blog was about. But I guess it's a personal finance. Yeah, so that's why I changed mine as well to Canadian finance and real estate, because previously it just said finance and real estate, and I would get a lot of US viewers, but then I wasn't giving them the content they were looking for. Okay. So yeah, so I just had to adjust it slightly. So can you tell my audience, if they haven't met you before, what you do, your YouTube channel, and anything about yourself?
Yeah, sure. So I'm a CPA from Montreal. I started this YouTube channel, I think in 2017 when I was on parental leave.
Nice.
I thought I would do it for fun. I saw a lot of people doing YouTube. I think what got me started was, what's the channel's name? The Project Life Mastery, I think.
Okay, I heard of it.
What is his name? The bald guy.
All right.
Another bald guy. Yeah, so this guy inspired me to start. He was always saying it's just a matter of providing value, and then with consistency, it just grows on its own. It works out at the end if you just provide value and you stay consistent. The hard part is being consistent, though. I think I've gone 4 months this year without posting a video, so that's the hard part. But I'm doing it because it's for fun. I enjoy talking about personal finance, and I like doing tutorials on Questrade as well. So it just started as something for fun, and if I can make money from it, that would be amazing. I mean, at the beginning, money was better at the beginning, but when you stop posting consistently, it drops hard. So that's the thing, but it's still fun though, and there's a community. A lot of people talk to you. A lot of people ask you questions. I mean, I actually, on my WhatsApp, it's mostly people from YouTube that I talk to right now.
Really?
So
okay.
I would say I've made friends from YouTube as well. So yeah. And I just basically, my channel is just about Questrade tutorials and just sharing my journey to financial freedom, and focus on journey. That's what it is mostly. So I share my good trades and my bad trades, just because I enjoy it.
Right. Yeah, that's good. I think that's kind of why I reached out a few weeks ago. I noticed you haven't posted in a while. And I noticed like your last video was like a bad trade or like a bad month for me.
Yeah.
I guess for everyone, like I didn't do well either. So I just wanted to reach out, just make sure you're okay. And you mentioned you were like you're moving houses, you sold a condo, bought a place. So it's definitely difficult to keep up the consistency. So I've been trying to post at least once a week. So every Monday is my schedule. There was one week where I was fasting and I couldn't post, and then everyone started messaging. It's like, "Where's the video? Where's the video?" I'm like, "Oh my god, I'm I'm tied. I'm tied to this schedule." But yeah, so now hopefully I try to like pre-plan a few videos. So if I do have to leave, like I'm going on vacation, I am going to Europe, so hopefully I can try to pre-record some videos like this one, so I can release at a future date just to keep the people happy and the consistency there.
You
You're
should.
right about the income decreasing though. I mentioned in one of my community posts, I increased my mid-roll ads. I only used to do one mid-roll ad because I didn't want to be too annoying, but I increased to two because the ad revenue is dropping. Like even though I have more subs and I'm getting more views, I'm making less in ad revenue. I'm not trying to get rich off of YouTube, but when my ad revenue decreased by like 60%, even though I have more views and more subs, like it was kind of frustrating. So hopefully I can, I just want the juice to be worth the squeeze, which it isn't right now.
Did your RPM change?
Yeah. Everything was kind of, everything was dropping noticeably since February, since January. I'm guessing if it's like advertisers moving to TikTok or advertisers reducing their spend for the upcoming recession, like I understand it might just be a lull in advertising, but I'm making less now, even though I have like more views, more subs. So kind of frustrating.
Yeah, meet Kevin. I don't know if you follow him, but he just made a video recently about it. He went from like, I don't know, 130K a month to 90K. And he's like, my revenue dropped considerably, guys.
Wow, I don't feel too bad
Yeah,
for him.
exactly. Not at all.
I watched a few of his videos, but it was a few years ago. But I think he posts like every day just because he makes so much money off of it that you
He
don't
posts
get.
4 times a day. Yeah.
He does?
Yeah.
Okay.
He went crazy in March 2020 when the pandemic started. He went
Yeah,
crazy, but he's really good. Like he's really consistent, and he's got 2 kids. I don't know how he's a machine. This guy, I don't know how he does it.
that's
He's
insane.
got a system and he sticks to it. I'm surprised he hasn't burnt out, man. Crazy.
I guess if it's your full-time job, like if I was making 130K a month, like I'd put out 4 videos a day too.
Yeah, that's true. Yeah.
Oh, but
He
man,
does. You'd run out of content, but he does like news. So he talks about anything that's happening. He just gives his point of view or summarizes it from his point of view.
okay. I guess there's like a never ending. Yeah, if you're always just checking the news and you want to talk about it, there's always something to say. But I'm just wondering if
Yeah,
you're adding value at that point.
exactly.
But
Yeah.
who am I? Who am I to judge?
I've stopped watching him because it's just he used to do videos on real estate. I used to watch his videos on real estate and his rehabs and stuff. That was fun. But when he started doing news, and we could tell that he started following the trends. Like he's picking topics based on what's most popular, which doesn't add value to me. So yeah, I stopped.
Yeah.
I keep him in my subscriptions just to get like video ideas, but I don't. I rarely watch him. And Graham Stephan as well. Yeah, I used to watch them a lot at the beginning, but now their topics is always it's always about what's the most common trend, and they all of a sudden everyone has an opinion on everything. Everyone's an expert on everything. So yeah,
Yeah.
I just stopped following it.
Yeah, I felt like theirs was more clickbait, which is kind
Yeah,
of annoying. Like I think I made a video criticizing. I was like, every other video of theirs is like market tanking, houses are
yeah,
tanking. It was like just doom and gloom. I know the doom and gloom sells, but if I wanted doom and gloom, I'd watch like the news or CNN. But yeah, I feel like they're just, they're not being fair if they wanted to provide like financial education, but I guess they're not. They're more entertainment now, which is fine. But I stopped watching years ago. I couldn't deal with the clickbait because
yeah.
the title and the thumbnail with the explosions and the fire, it's just not me. But maybe that's why I'm not making as much as them. So maybe
Yeah,
it's my
well,
fault.
they have a different goal. Their goal is to make money. They've turned it into a successful business, and they've got a plan and a system, and ththey're executing it perfectly. Yeah.
Right. I understand. Yeah, I'm trying to do the same. I'm wondering if I could become an entrepreneur because, like, again, like you, I'm a CPA. I got my like chartered accounting designation 10 years ago. The 9 to 5 lifestyle is probably not for me. I've always wanted to see if I could do something else, which is why I got my realtor license. And then I started YouTube as well. I started the YouTube mainly because I kept getting the same questions over and over again from colleagues and friends. Like, what's better, TFSA, RSP? What does it mean? How do I invest? So I'm like, let me just make videos. Hopefully I can help out some people. I also noticed, because like I work in financial reporting department of REITs. So I noticed a few YouTubers reviewing the REITs and reviewing the books that I created. And I noticed that they were saying they didn't understand fully, or they were saying something that were incorrect about the financial statements and MD&A that I wrote. So I was like, maybe I can create some videos and break down what's actually going on. So it was kind of interesting seeing people review, but when they're supposed to be financial like experts, because they're giving advice, but then they didn't really understand what the financial statements meant. So it's a little scary when people are basing their financial or like investing decisions on someone giving incorrect advice. But everyone puts that disclaimer in their video, like this is not advice, this is just educational or entertainment purposes only, which I'm wondering, like, I don't think you and I can put that, right? Because aren't we financial experts if we're accountants and if we're talking about taxes? I'm not
but
too sure.
we're not personal finance experts.
Okay.
Like, I think we need what's it called? Like a financial plan. Like we need to take the CSI course or something,
Okay, yeah, if we're like
financial
CFPs.
advice or something. Yeah, and then
Okay.
be part of an order. I think our advice is more like accounting, taxes, I guess, or
Yeah, I guess. And yeah, I think maybe I'm a little more biased now because I ended up, when the YouTube revenue started dropping, I created a course. So I spent like the last 6 months creating a course called Canadian Finance Pro. So it's basically an 8-hour pre-recorded course teaching you everything about Canadian finance. I noticed even though I have 212 videos, which is kind of a lot. Some of my videos will cover the topics that people are asking, but no one's going to go back 3 years and watch the older video. I guess like maybe it's too hard to find in my channel, but people kept asking the same questions, and a lot of people were asking for a course, even though everything you want to learn is available for free. So I ended up spending a few months and putting that together. So that's my new venture, trying to create and push this course. It's like 8 hours long right now, and hopefully I can add to it every few months. Part of
where?
it,
Yeah.
sorry.
Where are you selling it?
It's on, like, the hosting website is called Kajabi, but I ended up buying my own domain, just CanadianFinancePro.com.
That's good.
What's hard is that I can create the course, I can create the content, but I don't know how to advertise yet. So now I'm learning TikTok, YouTube, Instagram, and Facebook, and they all have separate advertising platforms. And doing all that while doing a full-time job and being a realtor, it's taken a lot out of me. So
Just put the link in your YouTube videos at the bottom.
yeah, I am. It's not getting enough. Like, let's say
Okay.
I have 15,000 subs. It's not getting enough. I'm trying to advertise to people who don't follow me, so everyone else in Canada. Like, what if they don't watch YouTube, but they happen to stumble across me on TikTok or Facebook? So,
Okay.
um, yeah, just like the effort I put into it, I kind of want more than just the people following me. So, I don't know. We'll see. We'll see where it goes.
Okay. And are you still working on as a realtor, or just what if it comes to you? If a deal comes to you naturally, you take it.
Yeah, I am a realtor. I actually just closed a deal. Like, I just like signed an offer for a client like an hour ago, so it's like perfect timing. I really like the realtor gig. I ended up getting my realtor license because I fired my realtor like 10 years ago. They didn't understand like taxes or cash flow. They didn't understand anything. They wanted to do this like hurry up and buy. So I ended up getting my license. It only took 3 months back then. It was pretty easy. 3 months, got my own license, bought my own place. And then everyone at work, like when I became an accountant, everyone who started like gaining some cash and wanted some investment properties, they wanted to do the same thing as me. Like, I had this like cash flow positive rental in Toronto, which it was normal 10 years ago. It's not normal anymore. So it
Absolutely.
slowly grew. Yeah, it slowly grew from there. And now everyone on YouTube is reaching out to me if they're in the GTA to help them buy or sell. So it's worked out perfectly. Like, I'm pretty happy with where it's going. I don't think I can do real estate full time. I think the industry is ripe for a disruption. Like, I think realtors make too much. I think everything can be automated. It's funny, even though I'm a realtor, I'm saying it can be automated. So I don't think it's viable for me to do it full time. I'm going to do it until the wheels fall off, I guess.
Yeah, here in Quebec, we have a website that competes with realtors where owners can list on that website without a realtor. And
Nice.
it's a pretty nice website, and it gets a lot of traffic. So you don't have to post with a realtor or use Remax because there's enough eyeballs on that website. The house that I bought actually was on that website.
Oh, wow.
Yeah, so but there's still good business here for realtors, but I don't know if Ontario has something like that.
So what is that website you're talking about?
Yeah, it's called Du Proprio.
Oh, okay. I don't think we have that.
Yeah, it's in French. It's only in Quebec. Yeah.
Okay, yeah, we have like FSBO, like these other for sale by owner websites. They just don't get a lot of traffic.
Okay.
The one issue that buyers get turned off from is that they're not getting a discount from the realtor houses. So the buyers know that the seller is saving 5%. So the buyer wants some discount, but the seller, they're going for sale by owner because they want to save that 5% for themselves. So I found a lot of people coming up to me. They're like, "Hey, like, can we negotiate a deal with this? Can we try to bring them down?" Because they have to try to meet in the middle. Because if it's for sale by owner and the buyer's not getting a discount, only the seller is winning. So why would the buyer go to that website instead of working with the realtor? So
But it's the same thing because if you go with a realtor, the seller is sort of including the realtor fees in his final price that he's going to accept. So that in both cases, the buyer is actually paying for the realtor fees.
yeah, but there's also like some people do cash back, like a little bit of a rebate, and there's also, sadly, I feel like a lot of the times I made a video about this. The negotiation is a skill that not everyone has, so I feel like I can talk my way into a good deal or a good price because sometimes you can sense desperation because it is a game. Like if you find out a seller already bought another place and they have 60 days to move, they're kind of on a deadline. They're not in the ball's not in their court to negotiate the best price. They kind of have
Yeah.
to take whatever's possible. And then there are certain games you can play with an inspection. Let's say I buy a place off of you and you're like, okay, the house is sold. Now I can focus on moving on to the new one. And then I get an inspection. I realize roof needs replacement, furnace needs to be changed. And then I can come back to you and I can take off 10, 20 grand. It's kind of mean because I know you're desperate and I know you already thought the sale was done and you want to move on, but then I come to you with this like 20K down and people usually take it. So there's some like shady tactics, but
I don't think it's shady, but that's exactly what I did actually, but not intentional.
nice.
I actually asked about the roof before putting an offer, and they said no, it doesn't have to, because when I bought it, it was winter, so the roof was covered with snow. So I
Okay.
asked because I dealt directly with the owners, right? There's no realtor, so I asked the owners, does the roof have to be changed? Because I think it was a 15-year-old house. So I asked if the roof has to be changed. They said no, maybe in 3 years. And then after the inspection, the inspector said it has to be changed this summer. So that's $10,000 easy.
Wow.
So I went back and asked for 10,000, but it wasn't easy. There was a lot of back and forth. Even the response was kind of rude. They were like, "We have a lot of people calling us. If you don't want, no problem. We're not disappointed. We're just going to take another buyer." I don't even know how I ended up convincing them. I think it's just a matter of the way you speak. Like I said, no, your house is very nice. I liked it. I even registered my kid at the elementary school. So I want the house. It's just that I asked if the roof had to be changed. You said no. So if I had known it had to be changed, I would have taken it into consideration. But now that I know that it has to be changed, I can't. 10,000 is a lot. Plus, I said I had given an offer like the next day after visiting the place. So like I said, please appreciate the situation that I liked your place that so much that I gave you an offer the next day, and I gave asking price, which I don't like to do.
Right.
But instead of overbidding, it's better to give asking price, right? So yeah,
Okay, that's pretty good.
yeah. So that I was able to convince them that way. Yeah, but now I don't know if I want to do the roof.
Uh,
I want to save the 10,000.
I know, but I think it'll save you like headache in the long run. Like if the inspector told you to change the roof, like because you don't want the water damage or any potential issues.
Yeah.
But yeah, sorry, I just dropped my pen. I hope that doesn't get picked up.
Even if it does, doesn't matter. So
Yeah.
where are you going in Europe? Where are you going?
I'm planning on doing a few weeks in Ireland and a few weeks in Scotland.
Okay.
Um, I don't know why I picked those places. I
Yeah.
saw something on YYZ deals. Like there was like a deal for like a flight for $300, and I was like, yeah, let me just take it. Let me go. I've
Nice.
never been. Let me just check it out.
Okay, that's nice. Good, fun. It's gonna be fun exploring.
Yeah, yeah, I hope so. I haven't planned, like I've been too busy to plan anything. I haven't traveled since December 2019 actually. Like I was in Australia for 4 weeks. I haven't traveled because I don't want any restrictions like during the COVID. So I
Yeah.
don't want if I have to wear like a mask everywhere or if things are locked down. Like I just
Yeah.
didn't even want to bother, but I'm kind of going crazy. Like this has been a few
Yeah, me
years that I
too.
haven't gone anywhere.
Haven't traveled since 2017, and
Oh
it's really
man.
it's taking a toll on me. So
Is
that
it
was
because of
actually,
kids?
yeah, just because of the restrictions, and I'm also a little bit afraid because I don't know if the kids get sick in the other country. I don't know how healthcare system works over there, right? So it makes me a little bit worried to travel with them.
Right, it makes sense. Even you don't know what the travel insurance might cover. I've never actually bought travel insurance, but maybe I should
I
just
think
when going to Europe.
I think my insurance at work has my group insurance at work has. I think it has travel insurance. I'd have to check.
Okay, okay.
Yeah.
One thing I wanted to talk to you about, I feel like it's taken a while for us to get here. I want to talk to you about options. Are you still options trading or have you taken a break?
Well, I I'm taking a break. Well, I'm still selling put spreads on the queue, but
Okay.
I'm gonna stop though because I don't have that much buying power remaining, and I don't like. I'm starting not to like spread. It's really like I'm selling a 5 point wide spread for $1. Uh,
Right.
and if it's a winner, it's like most of them are losers because it's crazy volatile market. And so I don't know if you know what I like the strategy where I want to make it mechanical as possible, so it's passive as possible. Every you know how the queues has like expiry every Monday, Wednesday, Friday.
Yep.
So I try to sell to make it as to follow the market. I just want to follow the market. I would sell a put spread on the queue, on the triple Qs at expected move every Monday, Wednesday, Friday, 28 days expiry.
Yeah, I remember you used to do that on Spy, right?
Yeah, exactly. I used to do it on
Yeah.
SPY, but triple Qs did not have 3 days a week expiring. Now it does, and the triple Qs have more volatility, so I prefer to
Mhm.
do it on the triple Qs. So yeah, so I do it on the Qs now. From Monday to Monday, from Wednesday to Wednesday, from Friday to Friday. So if the market drops, right, I'm just following the market. If the market's dropping, my first trade is the trade that's already open is not going to do well, but the next trade that I'm opening is going to be even further away, right? Because
Right.
volatility is higher, plus the stock already dropped a little bit, right? So my new short strike is going to be lower. So I'm basically just like laddering into the market.
Right.
If it keeps going up, well, then all my open trades are winners. Yeah. Now the problem is with this correction, all the existing open trades have been breached. So I've been selling call spreads against the existing put spreads to just limit the loss, right? But I'm
Yeah.
still losing a lot on these open trades. And now what happened now with this crazy rally up, the call spreads that I sold to mitigate the put spreads, the call spreads are getting breached now, you know? So that's annoying. So I want to just stop selling call spreads. And oh, and the other thing that's annoying is I'm comparing if I had sold these short strikes, if I had sold them naked instead of doing a spread, most of them were already profitable, like more than 50% profitable. Because it was a spread, it wasn't profitable enough to close. So I find spreads limits me from closing trades early and taking profit and making like turning a trade into a profitable trade. So
Right. Right.
I'm waiting to get enough buying power so I could continue this strategy, but with naked. So I would sell it same thing, but I would sell a naked put. I'd collect like $4 or $5. So already my break even is as much as the spread.
Yeah.
What happens most of the time is that I can already, as time goes by, I can close the naked put faster. So I don't have to deal to avoid the risk of that naked put getting breached. And if it's breached, my break even is wider. Plus, I can sell naked calls on the other side. And when I can sell naked calls, I can go further because it's not a call spread, right? So
Right.
a call spread, I try to sell it for $1, so I end up close. But if I'm selling a naked call, I'll be further away. We're looking to get $1 and then keep bringing it closer if the market continues to drop. And then I
No,
got
sorry, go.
I got burned on naked puts as well. I don't believe in rolling naked puts anymore. I used to like naked puts because you can roll them easily, but you can't roll when it's 50% down, you know?
I know.
So
Was that with Netflix?
yeah, Netflix was one of them. And just in general, like I imagine if I was doing the strategy on the triple Qs that I was telling you about, imagine if I was doing it when the triple Qs was at 400 and I had a 380 strike or a 390 strike. Imagine rolling a 390 triple Qs when it was it was at 275 not long ago. So I don't think rolling is a good idea anymore because of this unreliable market, because it takes too much buying power and then you're rolling for very little credit because you're deep in the money. So I think it's actually better to, if I have an expiry, I sold a short put, just take the loss and just open a new trade. A new trade that's, it has a new strike, a better strike, and just accept that I took a loss and just trust that overall I'll have more winning trades than losing trades.
Yeah, it's just sometimes the losers can be pretty big. So like
Absolutely.
it's like I stopped doing spreads just because of that reason. It was a little harder to manage. Like,
Oh, you can't roll spreads when they're breached. Yeah.
Yeah. The only thing you could do is if you increase the number of contracts,
That's
like
too
roll it
risky.
down.
Yeah. You're adding more risk to the trade.
Yeah, that's true. Like sometimes if I have I do 7-day spreads on Tesla and I can always roll out another week. So I can roll, because I'm doing such short-term expiration, there's so much theta that I can roll down without adding contracts, but I can only roll down like 10 strikes at a time, but Tesla has big moves. But I ended up in a similar scenario like you, like the Netflix with Square. So I sold I sold 7 naked puts on Square at 160. And then it ended up dropping to 80, right? Like, I don't know if you've been paying attention. So a 50% drop.
Video today, yeah.
Yeah. So it was pretty bad. But what I ended up doing, so it took me 4 months. I ended up selling naked calls to slowly roll it down. And now my puts are at, I think 90. I don't know what Square's at. I think Square's at 80. So I ended up rolling it down. It took 4 months, but I rolled it down 70 strikes. Pretty frustrated because my timing was pretty bad, but I didn't want to take the loss. I was just so upset that like I timed it. If I waited 1 or 2 days, I would have missed the biggest drop on Square and I wouldn't have been in trouble. But I don't know. It's just sometimes when I sell a put, the stock will drop the next day. It's just my timing.
I was selling puts on red days, but right now one red day is followed by another red day, so it doesn't matter anymore. Yeah. So I don't know. I'm done with rolling naked puts. I think I'd rather close the trade for a loss, get my capital back, and reestablish a new trade, a better trade. Because when you're trying to save a trade, it's just taking up too much buying power, and and then you're stuck. You're not doing anything. You're trying to, and then if you're running out of buying power, then you're forced to close that trade for a bigger loss.
Yeah. Like I was afraid of running out of buying power. Like I conveniently left myself like 25% of my cash just sitting around in case something happened. I felt the market was too high in December and January, so I kind of saved some cash. I didn't expect a 15 or 16% SPY drop though. It was a little too drastic. Maybe I just didn't believe it because like we already went through like the March 2020 like 50% crash. I didn't think 2 years later we'd go through another one. Like, and then like the war started, that caused a big drop, and then like the quantitative easing is not happening anymore, or the quantitative tightening. It's just making people panic sell, and it's kind of a downward spiral. So just kind of frustrated with the timing, but
I'm afraid that we might have another like 2000 2003 period. That's going to be ugly if that's the case. Like
I know,
a long bear market.
Yeah, because it's like we had a flash crash in like March 2020, but it came back within 3 months, which is not normal. And then if you look at 2000,
as if nothing happened.
I know, it was so weird. Like a lot of people like try to say that they made money, and I'm like, can you show me that you bought on March 24th? Like no one believed the market would come back. March 24th, I think, was the lowest day, but I thought it would continue going. So
absolutely, yeah.
And I took a big loss then. Like I I was in a Discord with a couple experienced traders, and they were just like, hey, like close all your trades. This is going to be bad. So I only took a 20K loss on 200K, which is a lot to me, but in hindsight, it could have been a lot worse. So I was kind of happy that people told me to close.
So
It's
you
just
were
like,
selling before you were selling before COVID.
yeah. So I was selling. I've been selling for like 10 years, but
Oh,
from
yeah.
2010 to 2020, everything I did worked out perfectly.
What were you
Like,
doing? What were your strategies back then?
so I started off with just covered calls. So I had like TD Bank shares earning 6% dividend. I was like, and I sold calls
You can't
at
really do
point.
calls on TD.
I know. So I was doing 0.5% a month to get another 6% because I was trying to like double my dividend.
Yes.
So I didn't understand. Obviously, like we learn options in university, but I never actually put it into practice. So the safest thing I could do was just selling a covered call. I already had 400 shares. So let me try selling 4 calls. And then it kind of slowly grew from there. And as like my buying power increased and my risk and my tolerance, I guess just understanding increased, I moved 50% to options, and now I'm 100% options. Like I try not to own any shares in my margin and in my TFSA. I'm trying to do pure options.
Yeah.
I find I make more and I just enjoy it more. Like I just enjoy trading.
But do you find you have a lot of unrealized loss?
Right now, yes. So I have a 90,000 unrealized loss, but I'm not too worried because it's like on Apple, AMD, Nvidia. So I'll probably just be holding those because that unrealized loss is on puts and I have the cash. I'll just take ownership of the shares, which I said I didn't want to do, but I'll just take ownership and kind of hold on and sell covered calls till everything comes back. So I think I had at 7 AMD puts at like 115, which is kind of close. I think AMD might be at 105 right now, so it's not the end of the world for me. But
Okay, that's
yeah,
good. That's not so bad, yeah. Do you have Netflix?
no, I don't have
Why
Netflix.
not? Why didn't you enter Netflix?
I wanted to, I just didn't have the buying power for it because it was like 300. No, I think it was like 600 before.
Yeah.
I try not to do too many big stocks because
Okay.
I like doing cash secured puts. I don't like doing spreads. And
Yeah.
my riskiest trade, I already allocated um, around $100,000 to Tesla. So I was selling naked puts, no, cash secured puts on Tesla. And I didn't want to take Tesla and Netflix in case something happened because they were both like tech related. But like I'm interested now. Like I feel like it was an exaggerated drop. Is
Uh,
it down 70%?
It was, yeah, like two exaggerated drops in a row. Crazy.
Yeah, yeah.
Imagine you're trying to roll it from 400, let's say. You know,
That would be
that's
stressful.
not fair, man.
I know. Like I saw what happened to you. Like you had a margin call, but then if you didn't get called in a few days, you would have been fine because it came back
Yeah,
up.
yeah, yeah, yeah. If I so I start it was I think Netflix was at 510. I sold a 430 put for earnings. So just a 1 day trade. Like,
$80 away.
yeah, for $1. It dropped to all the way, I think, to 360, but I think it closed the week at around 390. I rolled it. Okay, so I rolled it from 430 to 410, but like 1 month out.
Yeah.
If I had rolled it from 430 to 430 the following week, so same week, so just 1 week roll, keeping the same strike, that trade would have been a winner. I would have been done with it because the following week it went to 460 when Bill Ackman, or I think, bought it. Remember, it
Yeah.
flew to 460. So that following week, the trade would have been a winner. I would have been done with that trade. Instead, I rolled it. I rolled it for a month, so I was in the trade longer. I rolled it for a month so I can lower the strike to make it
Yeah.
safer and use less buying power. But then, and then time went, and then it dropped even more, and then I had no more buying power. I could have added cash, but I was afraid to keep compounding my loss, which would have been the case if I had done that actually. So it's a good thing I closed the trade. It was a 5K loss.
Right, right. Yeah, it's a good learning moment, but super
So
frustrating.
what's the learning moment? What did I do wrong? Play earnings?
No, maybe. So what I do is I roll 7 days at a time
Okay.
for that scenario. So I'm pretty close on AMD. Like I'm 10 strikes away. So I roll every Friday to the next Friday.
Okay.
And then just in case it kind of shoots up. But also, like, yeah, you're right. It might not be a learning moment because like no one would have predicted a 50% drop. Like, I
And
think you made a good play with a bad result.
yeah, but that's earnings. Like it's possible, but like Netflix had already dropped though before that earnings. So with the most likely scenario is that it comes back up, not
Yeah,
30%,
I know. So it's like, could it drop more? Yes. Is it likely? No. But
Exactly.
you hit that 2-3% that it could.
Yeah.
Yeah, like I've had scenarios where it's the opposite. Like Tesla announced, I think I sold a call on Tesla and then they announce a stock split and it goes up 10% above my call.
Yeah.
So then I start
It's scary.
rolling.
Yeah. I don't know how you do naked calls, man. I wouldn't dare,
Yeah,
especially
I
on
just
underlyings. Yeah.
yeah,
Individual
yeah.
stocks.
I don't know why. Like I feel comfortable. Like I'm always able to roll it or I always have buying power to manage. Um
You
I,
add
I
contracts.
yeah, so I can adding contracts is the easiest and
Yeah.
quickest way to get out of danger. Like I can roll for Tesla, I can roll up 50 strikes by adding a contract.
Yeah.
Like could it continue going up and I have a huge huge loss? Yes. Is it likely? No. I think eventually I'll get hit. Like I haven't been hit with a big loss because of like my riskier naked calls. Eventually it'll happen. Like I can't keep doing this forever and keep getting away, right? Um,
Yeah.
but I feel like I've been pretty lucky.
I'm gonna send you a new link. Okay. Zoom is gonna close.
Okay,
All right. So I'll just close it and send you a new link.
sure, sure.
That was fast.
All right, there we go.
Yeah. So yeah, because I sold my condo, made some good equity. I'm gonna wait until I get that equity, and I'm gonna deposit in my trading account, and then I'll like. I really got. I lost faith a bit. I lost confidence in the ability of making money off my capital. My goal really is to be able to generate income from my capital.
Right.
Having capital but not being able to do something with it bothers me. So I think with capital, you should be able to generate income. I don't want to put it in dividend stocks because I don't know, 5% is really not enough. I would have to have $1 million to care about the dividends.
I know, I know. It would take a few years for you to get into it. Like I think it's just you hit like a rough patch. Like everyone's losing money now unless you bought puts, which
Yeah,
I'm not an option buyer. Like I wish I bought puts, like SPY puts. I just don't feel comfortable buying. I just feel more confident, more comfortable selling. And
yeah,
unfortunately, we get hit with these unrealized losses. But I'm almost out of the weeds. Just I kind of got lucky with my rolling and my trades. But I think it's just a rough patch. Everything went down since January, so it's kind of frustrating.
yeah. I like selling too because I like the concept of selling where I don't have to predict the direction of the stock, right? I just have to pick a range. As long as the stock stays within that range, then I make profit. I like that concept. To me, it makes a lot of sense. But if you buy, you kind of have to guess the direction in the short term and also by how much it's going to move. But selling the stocks at 100, I sell an 80 put. I have like so much margin to make a profit, right? So to me, it makes so much sense. But then when it's always dropping, then I lost a bit of confidence. So I don't know. I don't really know which strategy to take. Like I definitely gave up on naked puts on underlyings, individual stocks. I'm gonna like none of that, no rolling either. I'm not gonna roll anymore. I'm
Okay.
gonna if I do naked puts again, it'll be on ETFs, either SPY or Q. But I'm not sure if I want to be like if I want to do like a 28-day expiry. I don't know if I want to stay in the market too long. I don't know if I want to be exposed in the market for that long. Uh, Earnings, I love earnings too much. It's just beautiful where you place a trade 10 minutes before the close. Next day you open it. Like I'm in the trade for like 5 minutes with minimal effort. I didn't do anything. You know what I mean? I don't have to guess anything or predict anything, and it's like
Yeah.
a quick, $3-4, whatever. Um, so I'm thinking it's something right now. I'm paper trading a few strategies until end of June just to collect enough stats and see what works. Even if it works now, doesn't mean that it's going to work forever, but just to give me an idea of what I'm comfortable with. So I'm trying to sell naked out of the money puts for earnings at expected move.
Okay.
So today we had, I think Coupa had earnings. So that would be like selling the 60 put on Coupa. I think it was like $1.60. So if it's a winner tomorrow, then it's $160 profit. Last week, all the earnings that I paper traded were all winners. I think last week would have been like a $1,600 profit.
Wow.
Just from earnings. But obviously, if you include Netflix was a $5,000 loss. Amazon, if I played Amazon, that's a $10,000 loss. So earnings can wipe out a lot of, like a bad trade in earnings can wipe out a lot of winners. But I wonder in the long run, is it sustainable? Is it profitable? Because you're not always going to have drops like Netflix and Amazon. So I'm strongly considering this strategy because I like the in and out quickly and not having to deal with the market and not having to worry of the nonsense that the market is doing right now. Like the market can be crashing, but a stock can have good earnings and you can still win, right?
Right.
But you don't have to care about what's going on with the general market. Just play earnings and you make a profit. So I like that idea, but I don't know if it's sustainable. So that's what I'm paper trading right now. I'm also paper trading zero DTE.
I love zero DTE.
So what do you do on zero DTE?
So I used to do SPY spreads, 0 day to expiration, but this is when so I took a sabbatical. So I took a year off of work in 2020 and I was able to trade 3 times a week, 0 day to expiration. But now I don't have that much time to trade and I can't manage the 0 DTE. So I don't do it anymore, but like I used to do it and I loved it.
What did you
So I used to do, I used to use charting, like technical analysis. I would pick by 10 a.m., I would pick a top or a bottom, depending on where the market was going, and sell like five spreads, try to make, I would go pretty risky. So I'd try to make like $500 or $1,000 a day. Just, call spreads or put spreads on SPY. Just because this was before Q even had 3 day a week expiration. So it was 2-3 years ago. So I was correct 102 out of 106 times. The issue is those 4 losses were pretty big. Those 4 losses like wiped out like 20 trades.
So you had to have a stop loss. Like, what was your strategy? What was your approach?
I wish I could remember, but like if the weekly or monthly high was, let's say, like 320 and today was like 315. So by 10 a.m., if it was going down or if it was going up, like I'd pick the high or the low and I'd sell like 5 credit spreads at, let's say, 321 to 325, just like 4 strike wide or 5 strike wide. And it would be at 10 a.m. and I'd try to close it at 4, just right before market close. Because I didn't have work, I was able to monitor it all day. I would try to close. My loss, I limited it to 3 times the premium earned. So if I made $500, my loss would be $1,500. The problem is, I'd close the trade. Yeah, so I wouldn't set a stop loss. I would sit and monitor it like I was day trading. But I can't do that anymore. But I really enjoyed it. Like it was fun. I felt like I was doing something.
especially end of day, I just made $500. And
exactly.
You get your capital back too.
Yeah.
You don't have to worry about what happens after hours. If the next day market opens minus 3%, you don't care. You've got your capital with you.
I know, and especially on Fridays, I would exit on Fridays, either with a gain or a loss, but I wouldn't have to worry about what's happening over the weekend. Like if there's like macroeconomic news about oil or a war, I would just wake up on Monday morning ready to trade and have all my buying power. It felt pretty good. But what are your strategies? Like you mentioned, you're starting it now.
Yeah, so it's the same thing, but it's always going to be the put side, and it's on SPXW.
Okay.
The SPX weeklies, because it has daily expiries now.
Okay, I didn't know that. Sorry, let me write that down.
So I would sell at the like between 9:30 and 10 a.m.
Mm-hmm.
I would sell a naked put at expected move, or maybe I'd wait a little bit. So I'd enter depending on what happens in the pre-market. So let's say it's red in the pre-market, but it actually opens higher, then I expect it to drop back down to the pre-market level. Okay. So I'll wait before entering. If it opens higher than pre-market, then I'll wait before entering. But if it opens at the same price or even lower than pre-market, then I'll enter right away at the open. Uh, I'll go for the strike that pays $5. Okay, one contract SPXW because it takes like almost 70K buying power Canadian. So I
Okay.
go for the strike that pays $5, and and I do a bracket order in Questrade, and the stop loss would be $15, so 3x.
Yeah.
Okay, so collect $500 or close a trade for $1,500 and lose $1,000. So either I win 500 or I lose 1,000.
Yeah, I was doing the same.
Yeah, so I would do that. I'm doing that right now, like paper trading it. And but it's working well right now because of VIX. But I'm afraid that when I get my capital and I start doing it in July, I don't know, VIX is low, and then I'm gonna have to be super close to the market. So it's gonna be harder for that trade to work. It's gonna work great when the market's dropping, when the market's red at the open. It's gonna work amazing. When VIX is over 30. Right now, VIX is in the 20s. So like here, I actually noted it down.
Okay.
I was going to do a video about this zero DTE. So I've logged 19 trades, 16 are winners, 3 are losers. And the funny part is one of the losers, if I had just held to expiry, it ended up a winner.
Okay.
You know, but it's too risky to do that because one of the losers was like a $5,000 loss. So I don't think it's a good idea to hold them to expiry, even though one of the losses came back a winner at expiry. So that's what, like 16 divided by 19. That's 84% win rate. Yeah. So I actually close it at $1. So if I sell for $5, I close the trade if it's a winner for $1.
Okay.
But the stop loss at $15. So that means when I win, I'd win 400. When I lose, I'd lose 1,000. So out of 19 trades, 16 times 400, I'd make 6,400 minus the 3 losers, which of 1,000. So minus 3,000, that's 3,400. So that would have been 3,400 with one contract. I started beginning of May, so about a month. So it would have been a 3,400 with this strategy. Would have been 3,400, and then plus earnings. So that's what I'm thinking. I like the idea of not being in the market for long. So quick, like being in cash at the end of the day right now, I think is a better strategy because I don't trust it. I find this market is totally manipulated, man. So it doesn't make sense how stocks are dropping. It shows that there's bigger players moving the stock, you know.
You're right. If you don't, like, to be honest, I might steal that XPXW trade from you. Like, I like that idea. I like seeing, you know, because you don't know what you don't know, and I stick with my strategies, but I haven't even heard of that, the daily one. So I'd like to take a look. That's pretty interesting. I'm always interested and open into new strategies and what else, what other people know.
Today was a winner. Yeah.
Very nice. So you said expected move. Where do you find expected move?
No, I just look at the straddle value.
Okay.
Yeah. And anyways, I go for the strike that pays $5. So it's not exactly expected move.
Okay.
So expected move is the straddle value. So I think the straddle was worth 40 points today on SPX. So it opened at around 2150 or 2160, 2150, not 21, 4150. I ended up taking the 4110 strike today. Okay. It actually dropped below 4110, but when it dropped below 4110, the premium was worth $12. So the premium that I sold for $5 was worth $12. So it wasn't worth $15. So my stop loss would not have triggered, but it was pretty close.
Yeah.
And then it came back, and then it ended up being a winner. It was worth like $1, probably around like 3 o'clock, I think was worth $1. It was worth $1.10 earlier in the day, like I think at 11 a.m. it was worth $1.10. But if I did a bracket order, I would have done take profit at $1, stop loss at $15.
Right.
So if I wasn't watching it, I would not have closed the trade at $1.10, right? But if I'm watching it, maybe I would have closed it at $1.50, $1.10. But you kind of want to respect the winners, because you want the probabilities to work out, because you want the winners to be at least 400 and the loss to be 1,000. If you're winning 300, 250, but then losing 1,000, then the 1,000 is wiping out too many winners.
Yeah,
Even I've noticed my winners, they would have been winners even if I didn't close them. So I might even just let winners expire worthless, so that my winners are 500 instead of 400. But then the losers, it would be a stop loss at $15.
Right, that makes sense.
Yeah, so that's what I'm paper trading this until end of June, and then we'll see if I'm gonna actually implement it.
Okay. Do you do like the interactive brokers paper trading, or you just on your own?
On my own, yeah.
Okay.
Mental paper trade.
Yeah.
But I make sure to put myself in the mood of actually doing it, because like when you're paper trading, you're not taking it seriously, but I'm pretending as if I'm doing it for real. What would I have done if it was a real trade? Would I have opened the trade now? Would I have waited later? Would I have missed out on the trade? So I really try to simulate it as much as possible, like as if it's real, as much as possible.
No, that's definitely important. Like I'm playing around with interactive brokers now, just because people keep asking about it, because I know Questrade is pretty expensive with their fees. But yeah, I'm just kind of checking out this paper trading thing. They give you $1 million to paper trade. So I'm trying to see if I could implement some different strategies there that I don't normally use. One strategy that I started just in 2020, it's a common one, like a poor man's covered call. It's probably been my most successful strategy ever. I know this is dumb just because it's luck, but I did it with Tesla, and obviously Tesla has just been increasing, and the premiums on the covered calls, like I make 500 a week, and they on poor man's covered call on Tesla, and it's been a year and a half now. Like my leap is almost done. So I bought a 2-year leap for $30,000, and it's January 2023. And it's almost like coming time. Like I might even take the shares or just roll out another 2 years.
So which strike do you sell though? Do you always sell out of the money?
Always sell out of the money.
What do you do if it gets breached?
So because I'm only selling 7-day to expiration, I'm able to roll it out of the money, except days when Tesla, like sometimes Tesla will have a 10% day. So it'll take me a week or two to get back, but I'll say 85% of the time I'm able to roll out of the money and I'll be fine. But because I'm doing 7 days expiration, there's always premium rolling out another 7 days. If I do 30 days, like I might be in the same scenario like you were in Netflix, but the opposite way. My call would be so in the money, there's no premium to roll it up. So I would just have to kind of lose the shares or be forced to close it. So just with Tesla, I don't do longer than 7 days because I don't trust Elon's tweets. He could tweet something dumb and like the stock kind of goes down or go up. So I'd rather not do anything longer than that. With NVIDIA and AMD, maybe I'm biased, but like I'm just I believe in them over the long term. Like I wouldn't mind owning shares. So I do 30 days with them. And also they don't move as much.
What do you have on NVIDIA?
So I have 2 calls on NVIDIA at 135. So I bought 2-year leaps and I've been selling 200 strike calls. So I think I do 30-day to expiration. I choose the 25 delta for the call. I'm close to being breached right now. I think NVIDIA was like 190 or 191, but I've been making some decent premium on that. Like when I saw NVIDIA drop, I figured it was time to buy a long dated option. I didn't want to own the shares, so I just bought a leap. Just more capital efficient, I guess.
And are you losing money on the leap?
Right now, I am losing money on the leap, but if it gets called away at 200, that's my break even. So I'm like $10 in the money on the leap, but I'm hopefully I can continually rolling it up. If the stock increases, I want to follow it upwards.
Okay. And do you think we're going to go through like 2000, 2003 period, like just a continuous gradual drop?
I'm going to say yes.
You think so?
Yeah, I feel like it'll get worse before it gets better. We were too high to begin with. So like the higher you are, like the bigger the crash. I don't know what the saying is. I'm not good at sayings, but I feel like we're entering into a recession. It might take a year, 15 months to get out of it. The average recession, I think, was 15 months or maybe 18. I forgot the stat, but I think it's going to be rough. If you think about inflation, um, companies will be increasing their costs. People won't be able to afford. People will lose their jobs. I'm pretty upset at what's happening, especially because I feel like it could have been avoided.
Absolutely, yeah,
Yeah,
absolutely.
just don't like stop printing trillions of dollars. Like how everyone kept talking about it. Like you can't just print money with no consequences, and they do it anyways. And everyone's like, oh, where did this 8% inflation come from?
And they're not stupid. Like I actually think it was done on purpose, to be honest, because they're not stupid. If you think that, then imagine what the experts know, you know. So yeah,
Yeah,
like I feel like lower class and middle class people who are living paycheck to paycheck. Imagine you make 4,000 a month and you're spending 4,000 a month. All your grocery items have gone up more than 50%. So your grocery expenses is going to increase. Gas has gone up a lot. So your gas expense is going to increase. Housing as it has increased. So if you're living paycheck to paycheck, what's going to happen? You're going to get wiped out. You're not, your monthly expenses will have increased easily by $1,000. Where are you going to get that extra $1,000? It's really not fair.
it's it's scary, especially because like my salary increase was 3%.
Yeah,
But
exactly.
when I told them, I'm like, guys, we know it's at least 6%, and it's
More.
the companies don't care. They're like, we're not giving you an inflationary increase. We're giving you 3% because we need
Yeah.
our bottom line to go up. And if staff get too expensive, they'll just start firing staff. Like what you're saying is accurate. The middle class and the lower class get hit the most. The rich and the 1%, they're the ones controlling the companies. They stay fine. Their money doesn't go down. It's always like I'm middle class. Like I get hit. Like even I notice my groceries. It's noticeable. Like chicken's getting
Absolutely.
more expensive. Like it's such a big difference.
Absolutely. Yeah, absolutely. Like vegetable oil has more than doubled. More than doubled. It was like $7 at Costco. Now it's $18.
No
That's more.
way.
That's more than double. Yeah.
That's
Many things.
so bad.
Many things. Over more than 50%. So yeah, it's not normal, man.
Yeah, and I don't like the only way people complain they want the government to fight inflation, but I don't think they understand the way to fight inflation is to take money out of people's pockets. Like there has to be little money. Like inflation happened because they were giving it away. People had too much money. To fight inflation, you have to take it out of people's pockets. There has to be less money in circulation. So that means like higher taxes, higher interest rates. It's going to be a bad few years. So
So what's your
yeah.
strat? Are you changing your selling strategy if it's a bear market, or you're gonna
So
continue with puts, or
I am sticking with puts with, I'm selling puts on like Microsoft and Apple and AMD. Like I am bullish on those long term. In the short term, I might end up owning the shares, but what I'm doing now is I'm 50% cash just because I'm scared. Like, you know how like the saying is be fearful when people are greedy, be greedy when people are fearful. But like, I'm scared right now. Like it could continue going down another 20, 30%. I don't
and
feel comfortable.
slowly, just gradually, yeah.
Yeah, and it's like we'll have like one day rally, we'll have like this random rally, and then it'll
Yeah,
continually going down. We had like 4 weeks where SPY was continually in the red, and
yeah,
it's very discouraging. Like I don't feel confident
yeah.
day trading. I don't feel confident like deploying all my capital.
That's the
Um,
only thing you could do is day trade. That's the only
yeah,
thing you
yeah.
can do right now. You don't want
It,
to
it just
be, you don't want to hold overnight.
Yeah, it sucks because like working in the office, like when I went, so I took 1 year off of work, and part of me going back, they asked me not to trade at work. So now like when I'm in the office and we're going to the office more often, like they're asking me not to trade. So I have to be careful. I'm home on Tuesdays, so I can trade on Tuesdays, but I can't day trade. I can only manage my losers or something. So it's something I have to work around. Like I really would like if I could day trade full time. A lot of people ask me like, hey, your account size, why don't you trade full time? It's like this is not enough to live the rest of my life. Like one black swan event, I could lose a lot. I could lose like 100,000, if
Yeah,
I don't.
you were making like 10 to 15,000 a month. Right now
Yeah.
you're making like what, 5,000 average a month?
Yeah, so now like the past 3 months I've been making 5,000. In January I lost $10,000. I made the biggest mistake I've ever made in like my in 12 years. I thought I closed a position, but I ended up doubling my position. Instead of buy to close, I did like sell to open, and I lost 16 grand in one day. I made a video about it. I was
But why don't you just
extremely,
reverse the transaction?
um,
You left it for a while. You thought it was
oh,
closed, you just left it?
I thought I closed it. So I left.
Okay, okay.
And then, so like, I thought I made like a good trade. I closed it and I left it. I had nothing open. I came back like at 4 p.m. and I was like, what is this?
But
$16,000 loss.
that's why you should remove that option, that feature where you still see closed trades, because it probably confused you.
I think you're right. I think you're right.
You
For some
remove it.
reason, I like to see it.
I don't see the value of it. Remove it, and then when you go back to your positions, then you know for sure what's open. But now you probably saw two lines, and you thought the second line was the closed line, right?
Yeah. And like, I saw the thing pop up saying like order filled. So I was like, all right, I'm done. So I kind of logged off. So
You
I've
should
been
always look at the confirmation window. It says
lesson learned. Lesson
I
learned.
always read it. Yeah, I always read it. But
Yeah.
I'm a little bit more chicken though, so maybe that's why.
Yeah. So like, here's the thing. Like, hopefully my boss isn't watching this, but I was at work making the trade, so I had to do it quickly, and I just kind of made the trade, logged off, and kind of continued working. And then I signed back in at the end of the day, and I was like, oh dear, this
Do
is
you
this is
have
what I get.
do you have any rental properties?
Yeah, yeah. So my first the reason why I became a realtor is I bought my first rental property. There's like suburbs in Toronto called like Newmarket, so I ended up buying 3 rental properties. I bought these years ago, like 11 years ago. I haven't been able to buy any recently because the price in the GTA has gone up so much. The rental properties, these are great. Like I've had some bad tenants in the past, but I've been super lucky with the tenants I've had now. Like sometimes I don't even see the unit or the property for a year just because they don't call and everything's fine. They pay every month. I've been pretty happy. I know sometimes people get nightmare tenants that make you not want to own rentals ever, but I feel like more likely than not, you'll get a good tenant.
So I'll ask you a question. You don't have to answer it if you're not comfortable. So your portfolio size, your capital, where did it come from? Did it come from savings from your job, or did it come from past real estate deals?
So 143,000 of 600,000 was me depositing it from real estate commissions, and then everything else was made just trading and gains. Um,
Okay, for real.
yeah, but like that's over 12 years, right? Like I started in 2010, and
Okay,
everyone says like that's too good to be true, but
that's a little. So you made 440K in gains by selling
yes,
off.
yeah. Um, Again, like my biggest success was like Tesla. I've made over 100,000 just on Tesla, right? I've been pretty lucky because from 2010 to 2020, the longest bull run in history, everything I did made money. Like
Okay.
I would take risks. I would do. I'm not sure if you watch. Like last year, I did a lot of BlackBerry and AMC trades. Like like I would make 1,000 a week just on AMC, like selling puts. It would just increase. Um, yeah, like I've gone pretty lucky. But I'm not saying I'm not going to act like I'm an expert trader because 2010 to 2020, no matter what you did, stocks went up. When you're selling covered calls, you make money on the premium and you make money on the stock going up. So I would follow stocks increasing and I would kind of double dip in the gains. And as long as I would sell the 20 and 25 delta, as long as you're 75% profitable, a lot of the times I was able to follow Apple up. Like I've owned Apple for 10 years and I haven't lost the shares. I've been selling covered calls on Apple for 10 years.
That's very good.
Yeah, Apple's is a relatively slow mover, except when the stock split, it went up 6% in one day. other than that, you look at Apple, it's a slow mover. It's hard to get breached.
That's very good. Do you sell weeklies or 30 days on Apple?
I sell 30 days on Apple just because of weeklies, it's too much to manage. And I feel like there wasn't enough.
And you
I
never got called away.
not a single time.
For how long?
10 years.
Wow.
Yeah. Like if you
Have
look
you
at
ever
my
been
cost,
breached? You've been breached.
yeah, I was breached. I'll say December 2021 when Apple was like at 180, when it was worth like $3 trillion. I was breached, but I was only like $2-3 in the money. But you just continually roll out 7 days, and I'm fine.
Do you roll for a credit all the time?
I try to because I've been rolling for break even because I didn't want to lose the Apple shares. I'm kind of stubborn. I don't want to roll for a debit. Just like I think it hurts my feelings. It's like it feels like a loss. It might not be the smartest move, but if it makes me feel better, like I would do it. Like I try to tell like the people watching my trades, this isn't like rolling my square from 160 to 90. I'm not saying that's the best move, but it's what I wanted to do. Mentally, I didn't want to take that loss. So I rolled for 4 months, which is a lot, but I'm out of the weeds now, or I should be out of the weeds soon.
Yeah. And do you sell the call on a green day or does it matter?
So I try to, I think like you, I try to be more mechanical and I like following the tasty trade way. So like if Tom Sosnoff says, hey, close at 50% and roll, like I try to. Sometimes I get greedy and I wait for 75%. And no matter what the day is, if it's green or red, if I hit 75%, I'll try to continually roll it out. I just found I haven't been able to time it. Like I'll wait 2-3 days and it'll be like moving sideways. I like, let me sell a call and then it'll go up. I'll have a green day or maybe, yeah, it's just, I want to be more mechanical and stop trying to time it because my timing is horrible.
Wow, that's impressive. 10 years rolling Apple calls out of the money without getting called away. That's amazing. You could have done it naked. You could have sold naked calls then. And
You're right, but it was in my TFSA, so I had to do cover.
yeah, no, but that's amazing. Yeah.
Yeah. I feel like it's just, I don't know, just luck, I guess.
So what's your cost basis on Apple? Do you still own Apple shares?
Yeah, so I think my cost base on Apple is 50, but it's been split.
Okay.
So I don't really, so I do remember selling, when it's split, I ended up with like 400 shares when I only wanted 100. So I remember selling shares to buy like another rental property. Yeah, I haven't kept, I don't have the best memory of everything that happened with those Apple shares, but I have 100 left.
Okay. I don't know. Sometimes I wonder if I should just do real estate because like I made the most equity in real estate more than selling options, But the thing is, like you said at the beginning, there's no cash flow in rental property. So the profit is made when you sell because of that equity generated. But there's no cash flow, especially in Quebec. I don't know about Ontario, but there's no monthly cash flow in real estate. So I don't know. Sometimes it comes to mind that maybe I should just stick to real estate. But then, I'm reminded by the very little cash flow.
Yeah, like maybe, like if you could try to diversify, like instead of putting that like 100% of that capital you're getting from the condo sale into options, maybe do like 50-50, try to buy a property. Because in 5 years, if you buy a rental and you flip it in 5 years, you'll be very happy. It's a long wait, but you could have that capital. But you're right. It's more, there's nothing like cash flow positive about it. And even the taxes on your rental income, like it does get annoying, but I got lucky that I bought 10 years ago when things were cheap, because I think it's impossible if I were to try to do it now. Yeah. But it's, I don't know. If you're able to diversify, I think it would be good getting into it. Like I'm bullish on real estate. Like I'm trying to buy another one. I have to expand further into like Hamilton because that's the only place I've been able to find break even. If you're anywhere in Toronto or downtown, you'll be cash negative. It's almost impossible to be break even unless you put 30 or 40% down. But then there's no point in buying real estate with 40% down, because like the best thing about real estate is the leverage. Put 10%, and then you get this like 10-to-1 potential return, which is what I try to do.
Absolutely, yeah.
Yeah.
Okay. Where are you in Toronto?
Yeah, I'm downtown Toronto.
Okay, cool.
Yeah, I've been here my whole life.
That's nice. Great
Yeah.
location, yeah.
Yeah, I know, it's good. I like, because I get to bike to work, even though like I do drive a lot of places. Like in the summer, I'm only 3 kilometers away. I can bike to work. I like the hustle and bustle of a big city. Like I was in London, England, and I loved how busy and loud it was. Like that's my jam. I'm not, I don't have any kids, so I don't need it to be quiet. I don't need to be in the suburbs.
How much are your condo fees?
Condo fees are $560 a month on a 950 square foot unit. Is that a lot?
For me, yeah.
Oh, okay.
Of course. I guess you have an elevator and you have a pool, I guess. Or
So no pool. It's just a 20-year-old building. The thing is, because my unit is 950 square feet, 560 on 950, like percentage-wise, is not a lot. But if my unit was 500 square feet and I'm paying $1 in condo fees a square foot, like that would be considered a lot. So this building is like no frills. So I don't have a pool, no concierge. So for the last 20 years, my fees have only been going up. I haven't been here 20 years, but it's only been going up like $2-3 a year or something. It sucks, but all my utilities are included. So I don't have condo fees plus hydro or electricity. Like everything is all in one.
So let's say like $100, $100 to $200 is included. The internet or just like hot water and electricity?
Just hot water and electricity. So
yeah, so
I know it's bad, but I do have a mining rig where I mine cryptocurrency, and because I have like free electricity, I mine it in my building, and I don't have to pay for electricity.
Maybe you shouldn't have said that.
Yeah, hopefully no one will be watching, but I don't know. I've done it. It's been over a year and I haven't been caught yet. So I'm going to do it until someone complains or someone notices my electricity usage is extremely high. But
is it worth it though, mining?
It's extremely worth it. It's amazing. I wish I did it earlier. So in 2021, I used to make $1,700 a month mining, and that was profit. But that's because Ethereum was at $6,000 Canadian. Now Ethereum has dropped; it's around 2,000. So my income is around 450, 400 a month, which it's a big drop, but it's still pretty good. Like you don't have to touch your rig, you don't have to look at it, you don't have to do
completely
anything.
Passive.
It's the most passive thing I've ever done. It just runs. I wake up every morning, I check it, I get paid like every 2-3 weeks. I filmed a video. Sorry?
You should do a video on how to set this up.
Yeah, I did a video. So here's the thing. I don't know. I had someone help me set it up. I don't know like the exact like Linux, because like you have to use Linux to set it up. I made a video which got like 50,000 views, I think, on just mining. It's funny because like I showed people the receipts and I showed them the rigs, and everyone says like, "Oh, this is impossible. You can't do this." I was like, "I'm showing you. Like, I have the receipt up. Look, $700 for a GPU. I have the boxes. I have everything. I don't understand." It just seemed too good to be true.
You don't need them to believe you so you can get paid.
I know. It's weird. Just because I bought the GPUs before the shortage. So everyone's like, "Oh, these GPUs now are $2,000." But like I bought them from Best Buy for $700. I got in right before the shortage.
Okay.
But yeah, now the shortage is kind of gone. So it looks like we're running out of time. Do you want to kind of call it? So this is like 1 hour and 20.
Sure.
All right. Yeah, it was nice talking to you. This is the first time we spoke in person. Everything else has been over email. I'd like to do this again. Do you want to try to do this like every 6 months or so? Just like chat it up?
Yeah, sure.
It would be great. Just like a change of content, and we don't have to think of topics. We could just kind of chat about our process or our progress.
Just chatting. Yeah.
Okay. Well, Thanks for taking the time. If you've made it this far, it's an hour and 20 in. This is going to be a long video, but
you could do it in parts. Then you have
yeah, that's true. I
videos.
could do it. Yeah, I can do a part 1, part 2. But yeah, thanks for watching and tune into the next one.